Good afternoon, everybody. How's everybody doing? You guys are all overachievers, coming to the 2 o'clock session after lunch. That's good. I'm Brad Benbow, and I'm the chairman and CEO of Prolific. Prolific's the growth firm. We specialize in non-levered exponential growth, and our 150 clients operate in 185 countries around the world, and they all enjoy this kind of growth track in their efforts. You might say, how do you do that? We go about it 3 different ways. We go about exponential growth through strategy, through activation, and through capital. And it's really an extraordinary process, and we do this. Prolific owns 7 operating units that operate in 10 states, or 7 states across 10 offices, including Atlanta, Nashville, Charlotte, Orlando, and Washington, D.C., and we are headquartered right here in the world-class city of Indianapolis. So the reason that we're excited about teeing up this Food and AgTech panel and session is ag and food and beverage is one of the top 5 priorities of Prolific, and we got a long history of both representation and investment in the space. That representation includes the state of South Carolina agriculture, Fresh from Florida, Splenda, Pick Sweet Vegetables, CPAC Shrimp, along with Farm Rich, and many others, just to name a few. And you might say, well, like, how do you bring, like, what does strategy have to do with something like agriculture? And what I would say, give you an example from 2005, we represented a regional shrimp producer called CPAC Shrimp, had about 14% market share across the country. In the process of strategy and research and so forth, we discovered that, does anybody know when is the greatest period of the year for shrimp consumption? Long before data analytics, everybody thought it was the holidays or football season, maybe bowl season. It just so happens to be Lent as the #1 driver of shrimp consumption. And now they're the dominant player in frozen shrimp all over the country. And so we bring that to the table. And so we have a perspective. One of the reasons for Prolific that it's a top 5 priority to be involved in ag and food and beverage is the simple fact that through our clients and that activity in 185 countries, we see a world on fire, and we believe that the U.S. is going to be responsible for feeding that world over the next couple of decades. So I think you're going to be excited. This is an incredible panel. We're going to get some real insight into what the dynamic is out there for investing and participating in the food and ag tech space. And so I just encourage you to sit back and enjoy, and in all things grow.
Thank you, Brad. That was a fantastic intro and a good segment into this session, which, yeah, we need to, food and ag need to feed the world. To do that, we need new solutions. To get those new solutions out there, we need money. So good news and bad news on that front. So who wants, show of hands, the bad news first? Who wants the good news first? Oh, let's go with the bad news. So the bad news is that investment to Agbioscience is down about 50% since 2023 for a lot of reasons. One of the biggest being there's a massive downturn in just tech in general right now. Investors are sort of sitting on their hands a little bit. The good news is that, well, I should introduce myself. I'm Jennifer. I'm the Global AgTech Editor for AgFunder, and we are a media outlet. Separately, we are also an investment fund. And so AgFunder data for the first half of 2024 shows that ag biotech is actually the top funded category so far this year. So there is a little bright spot, and we'll see sort of how that pans out, when we get to end of December this year. But we are going to talk about why is funding down, what can we do about it, what can startups do about it. I want to introduce or have the panelists introduce themselves real quick. So Mark.
Yep, so thank you, Jen. Good to see you. Mark Brooks, I'm the Managing Director of FMC Ventures. FMC is one of the major agrochemicals companies in the world. So we make crop protection products for farmers. And we believe that the future of crop protection will be very different within our lifetimes. Hence the reason that FMC Ventures exists. We exist to invest in startup companies that we think will have an outsized role in reshaping the future of crop protection and agricultural production. So we act very much like a venture capital fund would act, mostly focused on early stage deals with a global mandate anywhere in the world.
Well, my name is Natasha Cox. I am a Senior Vice President of Ag Lending at Farm Credit Mid-America. Farm Credit Mid-America is part of the National Farm Credit System. I've spent 22 years in the system. First and foremost, I'm a producer. We raise corn, soybeans, wheat, a little bit of livestock and children on our farm here in West Central Indiana. And when I think about the importance of farm credit and access to capital, it's not your traditional route. Most of you that are sitting in this room think today, right? How many of you are founders or working in that space today? How many of you are corporate? There, okay. How many of you are working in research, university type of setting? Okay. Public-private partnerships, nonprofits? I'm sure I've missed a few. How many of you are in commercial banking or lending? Hey, friend, me and you'll stick together on this here. Okay, so when you think about this, the farm credit system plays an important role, though. One, most of the time it's as an exit strategy, right, when the exits are happening. And the success has already been created, and most of you could tell us a story today about how I can't get access to the capital that I needed, as Jennifer opened up to. But also the system supports 13 funds through the rural business investment companies that the USDA launched. In 2022, that was about $1 billion, and the farm credit system had 70% of the funds that were committed to that. So we have a commitment to rural communities, agriculture, innovation at all stages in the supply chain, and I'm looking forward to the opportunity to discuss that with you today.
Awesome. Yeah, I love that we've got two fairly distinct perspectives on capital here on stage today. Natasha, I'm going to stick with you for a minute and start off by going back to what you said about exits. We're not seeing a lot of exits in AgTech yet. I guess what I'd love to dig into is why is that? Is the lack of exits simply a product of this broader macro environment that we're now in, that everybody's in? Or is there something else we're not talking about yet in AgTech specifically that's limiting these exits?
Mark and I visited when we came in today about where we're at, not only in AgTech, but the Agbioscience convergence, and that, we think that there's a tremendous amount of upside potential. But if I throw on my econ hat and we think about the macro fundamentals of the economy today and just the basic movement of money, we're seeing funds sit out there. Traditionally a fund would sit out there for 5 years, right? We're not exiting at 7 years today, but we also look at where things are at as far as interest rate pressures, federal fund rates, prime rates, the U.S. dollar, all the impacts that we have impacting the movement of money, not only in the U.S. and globally. In looking out, Jennifer, we think that there's an opportunity in the next couple of quarters to maybe see some of those funds turn. We think that there's an opportunity based on alternative investment strategies that could be out there. Obviously, we've got something coming up in November that we maybe even hit on that says, how does the election, how does the geopolitical conversation even impact what's going to go on, or does it even have a place at all? But I think at the end of the day, though, there's also a conversation that every one of us in this room has to have with ourselves and say, is the product that I'm looking to deliver to the supply chain providing not only economic value in the future or a necessity to replace something that, as far as critical capital or critical constraint in the operation, but can they afford it? And when we look at net farm cash income, specifically in the United States, we peaked in 2022. 2020 was rivaling that, but it was filled with what? Government subsidies, right? And so when we look at where we're at today and forecasting into 2024, friends, there's a lot of margin compression that's going across all sectors of the industry. And so when you think about your product, not only developing and offering value, but can the industry afford it? And then if not, what is the future need that you're solving? But at the end of the day, I think that we forget to ask producers at times what they need, and that's the whole startup thing, is we're trying to solve a problem that they don't even know exists today to find a place in our market, right? Mark, that's the strategy. But with that said, does it fit into their cash flow needs, and is it a critical necessity? And so I think it's a combination of flow of money and where we're at from a financial and a monetary policy standpoint in the U.S., and then also just where producers are at in their life cycle right now.
Can I offer a different perspective?
Please.
Supplementary perspective, I should say. So, so the question is, well, why have there been so few exits? So let's think about that for a second, y'all. Think about the last 10 years of venture capital in agriculture. There has been somewhere around $40 billion invested, and most of it has been incinerated, just evaporated. There's been very few exits. You had the Climate Corporation exit in 2012, which was almost $1 billion. Since then, most of the exits that have happened since then have been, let's call it maybe 200 million, maybe 250 million, 300 million on a really good day. And you could probably count those on like two hands, right? And so if you compare AgTech to other technology categories, it doesn't look great in terms of the exit profile, the IRR or the ROI. But agriculture is not optional, right? It's required to feed the planet. It's required to make the planet better. It's required to feed the human species. It's not an optional category for innovation or for production. The other thing that you'll notice if you look at the last, 2020, 21, 22, interest rates were like close to zero. So anybody who wanted to invest their money and get a return, they weren't putting them into the traditional investment classes. They were putting money into venture capital dollars, which are more risky, obviously, but the returns are better. And during that period, as an entrepreneur, cash was free. You could raise money from almost anybody, and they did, and that drove valuations a little bit out of proportion. Cash was easy. Then interest rates kind of started skyrocketing back up. The capital dried up. Now you're stuck with these valuations that are way up here when they really shouldn't be way up here. And no company, FMC, Bayer, Syngenta, Corteva, these are really the acquirers we're talking about, they're not going to buy these companies for $500 million. That just, I'm not going to say never. It's just unlikely to happen based on what we're seeing. So all this is to say, and I don't mean to paint a gloomy picture, all this is to say that I think AgTech is still relatively new. It's still quite emergent, I think, compared to, we were talking about this earlier, Natasha, that you compare AgTech to pharma tech or other kinds of categories of technology innovation. AgTech is still, I think, kind of really at the very beginning of the curve. But we're going through, rightfully so, a reset right now. And that's not a bad thing in the grand scheme of things.
Yeah, well, awesome. And we'll go back to that reset point in a minute. But I wanted to ask you, let's start with you, Mark. Okay, given everything you've just said, given the volatility of venture capital, which I've always said is a fancy word for gambling, is venture capital the best investment vehicle for AgTech? And maybe just to quickly, for those in the audience that aren't aware, AgTech tends to have much longer return periods, and the technology, we're talking about a lot of hardware or biology, chemistry solutions. This is not DoorDash 2.0 where it's just a piece of software. It's a bit of a different beast. But yeah, what are your thoughts on that?
Yeah, great. I'm going to try to answer before I forget the question. I think I ask this question all the time. Like, is this still a viable category for VC dollars? And I challenge myself every day on this question. And the answer I always get is yes, it still is. And I stand by this. Why? Because when you think about the problems that need to be solved in agriculture, we're talking about drought resistance, we're talking about disease resistance, we're talking about insect resistance, we're talking about healthier soils and better quality soils for plants to grow and thrive, we're talking about carbon, we're talking about feeding the planet. The big companies that do this today, Corteva, Syngenta, FMC, Bayer, UPL to an extent, they're really good at their core. They're really, really good at doing the science that's in their core, and that's like any big company does that, right? But the kind of innovation that we need today is, I'm going to use the buzzy word, a little bit disruptive. We need we need game changers. We need game-changing technologies, biotechnologies, hardware sensor technologies, artificial intelligence stuff. We need technologies that will accelerate the discovery process for new molecules for crop protection. We need technologies that will accelerate the process of finding new genes that we can silence or turn on or amplify in plants. We need technology that will move faster than climate change will move. We need technology that will move faster than insect resistance is happening in plants and whatnot. And so yes, I do think it is. The big companies like FMC, we're good at innovating, but dare I say, we're probably not going to find those game changers ourselves. We have to look towards the startup ecosystem who are motivated to find these game changers and commercialize these game changers. And so short answer is absolutely yes, but I also prefaced it with my longer answer.
So, Mark, what do you think is a typical uptake cycle? I think back to AgTech, and we'll start with something very simple, GPS uptake. 2 decades ago, where GPS was not readily available in the countryside, and wasn't the uptake, we may not have known where that's going. I would say there's almost 100% uptake where it makes sense. And so it really depends on what you think that life cycle is, right? And that's providing optimism here. But agriculture obviously is a much different space. And so it's a long game, right? It's a long game with short-term needs and changing consumer demands and behaviors all the time alongside of it.
Yeah, so let's talk the life cycle a little bit. So farming, think about this, y'all. The average farmer in the United States, really anywhere in the world, the average farmer has, say, 30 to 40 times to farm in their entire life, right? You do it once a year. You plant, you harvest, you take care of the crop in between. You do it once a year, every year, for probably 30 or 40 years, and you hand it off to your grandkids or your kids, and you're moving on. That's it. And so the appetite for adopting something that's wildly different than what they're familiar with is just not there. It's just not there. So that's issue one. Issue two is the growing seasons are slow. So if you have a new technology that you want to get adoption for, it's going to take a while to get that adoption curve kind of going. The other thing is the regulatory environment is complicated, particularly for chemistries and traits and things like that. So that just takes a long time to get through that process. And then the final thing I would note is the margins for farmers. We talked about this a little bit earlier. So farmers' margins are like this big. And so if you're going to get a farmer to adopt a new thing, it's got to be at least as good as what they're using now, and at least as cheap as what they're using now. Otherwise, they're just not going to take the time to do it. There are some interesting nuances to this comment that I just made. You look at in the U.S., the average farmer is like 60-something odd years old. That's a profile of thinking. In Brazil, for example, the average farmer age in Brazil is I think around their 40s, late 30s, early 40s. Totally different mentality of wanting to do new things and push the boundaries. So those are my quick. I'm not sure if I answered your question. I forgot what it was.
I think it was great conversation. Mark, you did good.
I think we've done a bit of an epic tangent. It's great. It's awesome. But let's talk about, okay, what are those technologies that you all are seeing? Natasha, why don't we start with you, especially coming not just from perspective of farm credit, but as a producer as well. What are the ag technologies out there right now that you find there's a compelling use case for?
Well, first and foremost, the labor continues, as we all know. How many of you have heard we need to solve a need for labor regulatory, that whatever that may be. I'm getting a few hands out here. We're hearing that from our producers, our agribusinesses alike, everybody along this food chain, and that's not going to change. Can we all agree? And I think we are going to continue to have this conversation about labor. And so anything that we can do on the farm to automate and mechanize with value, okay? Then you turn on the subscription-based conversation to some of that as well, and then what do they actually do with the data if there is real data that is available from that? And so whether it's things like operating with aerial imagery or we're able to use autonomous tractors or autonomous sprayers or drones on the farm, anything that we can do that when there is a mindset of change, right? How many of you think about change management as a part of your go-to-market strategy when you're trying to enter in your product to the market, right? Because that's a big thing that Mark just talked about, the ability for the industry. I would discern that a little bit and say farmers will grow what they need to grow that will profit them where they can as far as the space that they're in environmentally and weather and all those things. And so while the age of the farmer is continuing to grow, the dynamics of that farmer is changing. And so as you bring new opportunities to the table, if you're able to show that there's not only economic value, but you can help with some of this regulatory conversations and some of the big issues with labor that's hitting us on the farm, Jennifer, that's huge. And then you think about the buzzword, I'm going to avoid it today if I can, but I'll say it, QIABA, sustainability, ESG, all of that. You're giggling at me, are you? I tried. But the reality of it is it's real, right? I mean, it's real. We want to be climate friendly. We want to be climate smart. And so how do we use IoT, the connection of Internet of Things with things that can solve problems that producers don't even know that they have today, or they're not an expert at, right? We talk about needing a fractional chief innovation officer at most of these farms today, right? Or actually maybe just a chief innovation officer in general, a chief technology officer, more so, Jennifer and I were visiting, than even the muscle that we need on the farm today. And that's a really changing mindset. So Jennifer, I would say I'm looking at biologicals, what we can do to help us continue to produce more with less in a way that meets the changing consumer demands, also allows me access to multiple markets, right? Not just the U.S. market, but many markets across the world. And then also, how does it help us solve these dynamic labor issues that we're having that are going to be continuing to be a challenge, both politically and just right there on your farm?
That's great. Mark?
Yes. What was the question? The types of innovation that we need?
Yes.
Yes. Okay, that's easy. That's super easy. So let me start with the top-level problems to solve. Top-level problems to solve are food security for the world. Labor is getting more difficult for growers globally. Profitability for farmers basically stinks, so got to solve that. And sustainability. So just not at least not making the planet worse than it already is. Ideally, turning it around and making it better. Those are the top-level problems. So within those top-level problems, what kind of innovation will solve those things? I don't know what I don't know, so I'm not going to be totally definitive in this answer, but I will say it's going to come down to robotics, automation. It's going to come down to, this is solving the labor thing, more precision agriculture. It's going to come down to biologicals. So this is a supplement or a replacement in some cases for synthetic chemistries. Synthetic chemistries are terrible for the soil quality and health, right? Biologicals are an amazing way to target a very specific species or a very specific disease. And so that can supplement, synthetics. That's cool and definitely in vogue and in scope, and I think a big part of the future of crop protection. Traits, genetics, all that kind of stuff, which I talked about earlier. I would say fintech is a big part of the future here. Agri-fintech. What I mean by this is technologies that provide increased credit and liquidity for farmers, right? Being especially in emerging countries, helping farmers get access to credit so that they can buy the more sustainable input or the more profitable input for them. Those are just, I think, the top level things that sort of come to mind. But what's interesting, I think, about that question, Jennifer, is if you had asked that same question 10 years ago, I don't think anybody would have said agri-fintech. I don't think anybody would have said biologicals. And so 10 years from now, then what are we looking at? I don't know, but we're paying attention, and the answer to that question, I think, will be kind of revealed any day as a game changer, as the things that really propel all of us forward. And that's sort of what venture capital is all about.
That and gambling. Yes, no, excellent point. So, and these folks asked me to throw in a couple questions they wouldn't know beforehand. So just to put you on the spot, what ag technologies are not working? I can think of a few myself, but I'll let them talk. What's either come out recently that just isn't really solving a need or a problem, or maybe something that was introduced 10 years ago that wound up not really living up to its promise. So maybe
I've got 2 answers, maybe 2.5, depending on what I can remember. I'm super skeptical of indoor agriculture, or sometimes it's called controlled environment agriculture. This is the big expensive buildings that consume an enormous amount of electricity in order to grow spinach or lettuce. That just doesn't make any sense to me. Like the unit economics for that are not attractive. Scalability unit economics doesn't work. Like most consumers are not going to go to the supermarket and pay $1 or $2 more for a box of lettuce when they can get the lettuce that looks kind of the same way and same nutrition. It's cheaper. So that's the thing. It might make more sense in places like Saudi Arabia where there's more food security issues. The second thing I would say would be, I might offend some people here, but I'll say anyway. Alternative proteins. Alternative proteins. This is what I'm talking about. The pea-based proteins, the soy-based proteins. The food that's meant to taste like chicken and look like chicken, but it's actually made out of soybeans. Or even the things that are grown in the test tubes that are made to mimic, chicken or cow meat, whatever. That definitely has a role, I think, in a more sustainable future because cows are methane producers and all those kinds, But again, the unit economics are pretty poor, and I think you saw the several big increases in valuation of like Beyond Meat and some other companies like that really popped, and now they're tanked. So that's one, and then the third one. Let's see, I already forgot. So maybe I only had 2. Right, I'll reserve the right to come back to it.
yes, you can butt in when that third one comes back to you.
And to lead into that, I would say we hit on fintech, but from an alternative position of that, there's a lot of subscription-based technologies that are out here that go through a very short life cycle, right? One, because of just the end-to-end support that is required for the adoption of that, and then somebody working in their basement constantly to replace that. And so I think while I do agree with you that that's a continuing emerging space, it's something that we have to have a spotlight on. I think at the end of the day, producers, agribusinesses to some extent are subscriptioned out with some of these technologies that are there. I also know your business model, and I know you have to have that to make it work, so I also don't want to offend anyone from that perspective. Speaking of some of the things you hit on, alternative meats, do you think there's a correlation with disposable income and where we're at and really core access? So, we live in the greatest country in the world, some may say, and when you think about those of us that are sitting in this room and the state that we're at and the access that we have from a geocentricity standpoint to food, fiber, and fuel, food security isn't something that comes up, and exploration with our alternative dollars is something that we can afford at some extent to do when you think about the wealth of the United States and some other countries. And Mark, I think that I kind of geeked out on him earlier and I said, hey, I'd like to do a dot plot of a correlation of U.S. net farm income, U.S. wealth, U.S. dollar of the value, AgTech, VC investments, and adoption of new technologies. And we're still fairly new in the life cycle of AgTech and Agbiosciences, but that just doesn't mean there's any less appetite for it. It just means that I think producers and even consumers are going to be a little bit more picky about where they spend their dollars because they have fewer dollars to spend today than they even had yesterday.
No, agreed. Fully agree with that. Can I come back to the third thing I was going to say?
Of course.
I remember it now. It was data. So data bear with me for a second. So farmers, there's a ton of data that farmers have access to. There's a ton of data that's generated by farmers when they do all the things that they do. And I would say 10 years ago, that was like, just having the data was amazing. That was a game changer. Like, having that was valuable. Today, though, I would argue that data by itself is a total commodity, right? It's almost free to generate. Satellite imagery is super cheap. That was novel 10 years ago, but today it's super cheap. What's next, though, and so if you're a data company trying to raise money in AgTech, I'm like, this is not that compelling. But the next step beyond that would be doing something with the data, the analytics, the translation, the actionableness of it. So.
I think that next best action is a huge conversation and those insights and recommendation. And so that consulting piece that comes along with it, and it really goes back to that fractional CEO, fractional CFO type of conversation. How can you fill a void that the market needs today? And it's dynamically changing. And we don't just need data, because it's been proven that outside of academia and corporate world and others that have the resources to do it, the producers, very few of them are able to actually act on the data that they have and create next best action. And next best actions creates margin. Margin creates the ability for them to buy your products, right? And without that, we're in a stalemate, and then all we have is overhead. And you've got somebody like me sitting in the room with them, having a conversation as a partner of saying, hey, how is this providing an ROA or an ROI to your operation or to your agribusiness and your earns and turns? And Mark talked about it earlier. I'm actually really sad that you brought up interest rates first. That's really disappointing in me, that I let you do that, and profitability.
I know.
Gosh.
I was fully expecting to get smacked in the back of my head when I turned around.
Yeah, I should have came out guns blazing with that, but I'm trying to rebrand myself and traditional lenders up here. So, I mean, at the end of the day, not only do you have a hard time getting access to capital and your cost has increased, but so are those that are trying to buy and access your product as well. Okay.
We'll try to overlook it.
Thank you,
Yeah.
Jennifer. Yeah, I appreciate that.
Ask us something else we're not prepared for.
Well, actually, I was going to look to the audience and say, does anyone have any questions for the panelists yet? Yes. We should be passing a mic. Yes.
Hey, Frank. How you doing, man? Good to see you. Check.
Hey, Frank Clemens here. Totally surprised you guys haven't even hit the carbon market yet. We're looking at it. It is going to take off. We're seeing what we're seeing in Europe already, and artificial meats in Europe is very high, Mark. So got to look at the market and where it's going. So why not carbon market? Why aren't you guys talking about this as a trend coming up in the near future here?
Well, we're waiting on you to ask the question. That's what we were
Frank,
doing.
I'm so glad you jumped in right now. Yeah, Frank, and I didn't say I don't want to use that word, but I think when you think about sustainability and where we're at and the market opportunities to monetize, but also to bring further evolvement to that market as well. When you think about not only sustainable practices and measurements of that and quantifying that and the data around that, no one's really been willing to come out and say, I want to define what this means, right, at a producer level, or everybody's tried their own. And so anytime we could monetize something that's good for the climate, good for the industry, and good for the world, we need to do it. And so I think that there's a tremendous amount of opportunity when you think about clean energy, carbon, and what we do with it, and how we continue to not put the spotlight on agriculture in a bad way, right? Because agriculture, when you think about it, total carbon emissions, we could all tout what that is, big or small. It depends on how you want to look at it. But at the end of the day, we can do our part. And is there a way to monetize that for those of you in this room, but also for the producer, for practices that they're already doing, for practices or technologies that they don't even have today that they know? So,
Great answer, and love the question. So I think I agree. I think carbon markets are definitely going to be a thing in agriculture one day. You think about the amount of arable land that's on the surface of the earth and how much carbon can be sequestered in that soil through those plants and trees that are growing in those locations, it will blow your mind. And so, yes, The challenges that have to be overcome, and here's just, I'm going to rattle off a few things for y'all, for you entrepreneurs who want to do this. Here's the things you got to think about. You got to think about permanence. So in forestry, it works great because a tree stands for 100 years and it captures the carbon and does what it does. In agriculture, if you're growing corn or soybeans, and you till the soil, boom, carbon's gone. It sticks around for 9 months and then it's gone. The other challenge, I think, is the business model for a grower, right? So in order to get a grower to not till the soil or to use a different type of input or whatever, you've got to show them the money. You've got to show them the economic reward or benefit for doing this new behavior or new product. And so being able to pass that money, through the value chain back to the grower to give them that reward and incentive is critical and kind of hard to figure out, particularly in the row crop space. And finally, I would note that there's two different kinds of carbon markets. There's the voluntary markets, which you sort of see Microsoft dabbling in and IBM and Google dabbling in. The standards are a little loosey-goosey, and depending on which platform you go to, maybe this is the standard, maybe that's the standard. So that's the voluntary space. Then there's the compliance markets, which are regulated by some government authority, and this is how you do it. That doesn't really exist yet on a global scale. So that has to be worked out, I think, or at least the voluntary thing has to be worked out with some standards, some kind of industry consortium kind of standards. So I'm in full agreement, Frank, with the point. And we have, I would say, FMC Ventures, my team, we have seen probably, I'm going to guess, we've probably seen at least 8 to 12 startup companies in the U.S. and definitely in Europe that are trying to do this, different directions and angles and approaches to try to do it. We haven't invested in any of them yet, but we would love to do that if we found the right kind of structure and formula for it.
Right.
Frank, something we didn't maybe hit on either is just pharma tied to, our commodities as well, and what the future of that continues to look like, and, where consumers stand on that, and what we're willing to consume and not willing to consume, but also, how can we help areas that of our world that truly have food security issues, but also extreme medical needs that could be solved with innovation through food and the biologicals there. And I think that that's just a tremendous opportunity in space for us to continue to evolve in and dance in as we truly think about solving the world's problems. That's not the big sexy topic, right? Maybe that's not the high margin topic when you think about end consumers and buyers of it. But man, that's a noble cause, right? That's a noble cause when we think about the future and what we can do there.
Great. And did anyone else have a question? Okay. Oh.
Yeah, this is the first 30-minute window that I haven't heard the phrase AI all day.
You
and
ruined
not the
it.
kind of AI that we talk about in ag.
The next question.
Yeah, is there a in your purview, is there a role for AI in the kind of ag tech ecosystem going forward, specifically as it relates to the business models that are underneath those AI startups that are at least in the early stages of existence for ag?
Can I do this one first?
You can go, Mark.
Okay. So, short answer, yes, absolutely, definitely, capital YES, 2 exclamation points with a smiley face underneath it. So, yes. So, AI, I think, has a huge role to play in accelerating the process of discovering new molecules for disease control, pest control, et cetera. It takes, let's call it, about 10 years of research, of R&D research, to get a new molecule through the field trials into the regulatory process and eventually to the market. It's not dissimilar from pharma, really. It is very expensive. And so if AI can shorten that a little bit, oh my God, it would be amazing. And there's already companies out there that are startup companies and big ag companies that are sort of trying to figure that out. So that's one. The second one I would say would be around sort of figuring out what better decisions a farmer can be making now, given the climate conditions, the commodity prices and outlooks, the weather, the soil types and soil conditions, the crop that they want to grow, like all these variables that a grower thinks through as they kind of manage their risk to begin the season. There's got to be a way to simplify that, take the risk out of it, through smart, data intelligence and analytics and things like that. So yes to that as well. And then finally, I would say AI has a big role to play, I think, in, we were talking about biologicals earlier. Biologicals are things like peptides and RNA molecules and DNA things that can sort of latch onto the genes of a plant or an insect. But you got to know what to latch onto. You have to know what genes you want your peptide to touch, to quiet. And AI is the only way to solve that. I mean, you can spend literally thousands of years in a laboratory manually doing the experiments to find those traits that you want to deal with or work with. AI is really the only practical solution for being able to actually do that. So, short answer is 1,000% yes.
And I would say, Mark talked about the science side of it, and you think about addressing the labor needs. And we've used terms today like fractional CFO, fractional innovation officers. We've used terms like next best action. That's AI, right? That's AI. And so when I think about what that can continue to do to solve some of the regulatory needs on the farm, but also in businesses, we need to use our subject matter experts for their highest and best use, right? Solving the hardest problems that we have in our businesses. And the more automation, next best actions, insights, it's going to decrease training time, decrease our runway for things, increase user adoption, which helps all of us in this room. And so that's really, really important. But we got to make sure those insights are correct, right? And that we're doing the right things. But I can tell you a quick story. My sons on our farm will go to ChatGPT and ask a question before they dare come there, ask their father or me something. And so that's your next generation, right? That's your customer of the future. They're not getting out a manual. They're not trying to, and they're also they're willing to try to figure it out and explore and do different things. And so when you think about the demographics of the future of the agriculture industry, the age of the average farmer may be rising, but man, there's a whole lot of people that are the age of 18 or under, that are really, really hungry, that have grown up in a different world than even I have grown up in. And that's really cool to think about.
Yeah. Awesome. Well, we just have a few minutes left, so I apologize if we were not able to get to all your questions. I'm sure Mark and Natasha will be happy to hang out afterwards. I want to just ask you all to, everything we've talked about, what is a startup to do or not do? So I'd like for each of you to give me 2 do's and 2 don'ts for AgTech startups who are working in this environment. And that could specifically be around capital, or it could be something else. So whichever one of you wants to go first.
I'd say get close to the producer, the end user. We're seeing some really cool strategies executed, across the countryside and globally, where you're able to work across the supply chain with your product before formally exiting and going to market to help establish market value, but also a need in the market. And we have some examples of when that's worked really, really well. Also, I think there's a lot of pressure for growth, exit, as we've alluded to. And sometimes, this is a longer game, right? And you're going, Natasha, it can't be a longer game. I actually have people that are requiring it not to be a longer game. And so think about that. Think about your ability to partner if you can, and with excellent corporate partners like they're sitting right here for innovation funds, and really getting close to the end user of that supply chain and figuring that out because it's really costly to experiment today, right? But we need innovators. We need that, and so we don't want to discourage it. But the cost to do so is really, really expensive, as we've alluded to today. Not to discourage you, but it's, we're not playing with monopoly money anymore, right? And that will change. So have optimism, that will change.
2 do's and 2 don'ts. I'll start with the 2 don'ts. Don't let your valuation get out of control. That is a problem that has hit a lot of entrepreneurs in the 2020, 2021, 2022 period of time. So don't let your valuation get out of control. Also, I would say do not get distracted. It's easy to chase every shiny thing. You hear one little nugget from a farmer, like, oh my God, I want to do that. You hear a different thing, I want to go do that. Don't get distracted. So here's my 2 do's. My first do would be stay focused. Stay focused on the problem that you're trying to solve. Stay focused on doing that really, really well. And stay focused on having the right investors, around the table who can really guide you and support you in that. That's the first do. The second do, I would say, is to come talk to FMC Ventures.
All right.
That was a good plug, Mark.
Way to bring us home.
Thank you very much.
30 seconds under time, too. Now, thank you all for being here and for sharing your insights, and thanks to everyone in the audience. And I think we're good.
Thank you very much. Thank you, Jennifer.
Thank
Great
you.
moderating. Natasha, thank you.